This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
I'm going to say that there will always be 20 marks worth of company law in the exam, and there may be 30 marks worth of company law in the exam. So I want to start looking at company law. The examiner has said that he will invariably ask in each exam, he will ask a question concerning directors. So we need to consider the role and the position and the duties of directors. But company law then is where we're at, page 59. Types of corporation and the ways of forming a corporation. A corporation is an extended word for company. And the world of companies subdivides like this. A company is divided into public and private. There is actually a third category. It's an unusual one, and I suppose sensibly it would come out of private, and that's the community interest company. The community interest company. It's mentioned down at the bottom of page 59. A public-private partnership is not going to fall into the company law. It's not going to fall into that. It's a partnership. You just said it, it's a partnership, it's not a company. That's an interesting little thing. I find students, and maybe it's my fault, probably it's my fault, I find students confuse the words which you should use when referring to a company, and they confuse them with the word that you should use when referring to a partnership. A partnership is a firm, whereas a company is a company. You shouldn't talk in terms of a partnership being a company. Even the accountancy partnerships which have now created themselves into companies, they are companies. So, for instance, KPMG Audit PLC is a company. It's no longer a partnership. When I was at your level, audit firms, accountancy firms were not able to register themselves as limited companies. But they can now. But they're now no longer, therefore, are they firms. A firm is the expression you use when you're describing a partnership. Okay? So we've got this subdivision of public and private, and within the context of public, and it's something interesting that my fellow tutors, and particularly the tax tutors, are not totally aware of, that public companies may be quoted or they may be unquoted. Now there are tax rules which relate to public companies, and the normal vision that people have of a public company is that it's quoted on the stock exchange. But of course it doesn't have to be. A tiny minority of public companies are quoted on the stock exchange. There's only, I think, in the UK around 1,000 companies quoted on, public companies quoted on the stock exchange, whereas there are lots and lots of unquoted public companies. So we have that division. And then within private companies we have the subdivision limited and unlimited. This word limited is a description of the extent of the liability of the people who own shares or who are beneficially interested in that company. It's a description of the extent of these people's liability. But there are different ways of limiting your liability. So within the limited, they may be limited by shares. Their liability may be limited by the number of shares that they have, or it may be limited by guarantee. And if their liability is limited by guarantee, it may be that this company has a share capital, or alternatively does not have a share capital. So we've got a subdivision even within this guarantee company area. Now, I have no justification for putting figures on here because the figures are 100% certain to be wrong. Okay, absolutely, without question, these will be the wrong figures. But they're a reasonably close approximation, and it will give you an idea of the sort of split between public, private, quoted, unquoted, guaranteed, limited, CICs. It will give you an idea of the sort of numbers we're talking about. I'm going to suggest that we have 1 million companies in the UK. That's not unreasonable. It may be more, actually, but that's not an unreasonable estimate. And of those, there's probably around 10,000 public and therefore 990,000 private companies. I doubt sincerely there's more than 1,000 CICs, community interest companies. Which gives me then public companies 10,000, of which around 1,000 are quoted, 9,000 are unquoted. Limited and unlimited, I'm going to have to split 989,000. I cannot believe that there are more than 5,000 unlimited companies. I'm not prepared. If anyone were to say there are more than 5,000, I would be disbelieving. Which leaves me with 984,000 limited. And of those, I would suggest that I bet there's not 5,000 guarantee companies and 979 private companies limited by shares. And I'm prepared to split this 5,000 into 2005, 2005. Now, as I say, I have no justification for these figures, and I have no historical reference to determine how many there are, and I probably could find out if I wanted to spend my evening searching through the search engines. But it's going to be something in those areas, something in that sort of percentage relative numbers. So where's the weight of our work going to be? You're limited. Private companies limited by shares. Around 98% of companies in the UK will be private limited companies limited by shares. When I used to have my own practice, it was not unusual for people to ask me to form a company for them. The only type I ever formed were private companies limited by shares, with one exception, and I was asked to create a private company limited by guarantee and having charitable status, which was a most unusual combination and difficult to get the constitution through the charity regulators, let alone the company regulators. But I did it. But it was only one. All the rest of the companies I ever formed were private companies limited by shares. So that's where the weight of the effort is going to be. I'll look at quoted and unquoted publics because there is a definition. A company is a public company if it satisfies the definition, but we'll get there in a moment. We'll get there when we've gone through page 59 properly. CICs, I've just about said everything I want to say about CICs. Community interest companies, at the bottom of page 59 it says, available for organisations created for the benefit of the community or society rather than for the pursuit of profit. These are organisations formed for good, healthy, educational, commercial reasons, to chambers of commerce, that type of thing, or local sports clubs, or local health walking societies. It will be that type of company. But that's all. I have nothing else to say on them, because they're not likely, if they do come up in the exam, it's going to be 2 marks. What sort of company is a CIC? You have to remember it's a community interest company formed for good ideals. That's why it's there. But other than that, I would suggest you need to know nothing. Guarantee companies, or unlimited. Unlimited, I think in total over this next day and a half, I'm going to mention unlimited companies maybe twice. There's nothing to say other than I think they're a silly idea. I think they are. I can only think of one justification for having an unlimited private company, and I'll tell you that in a few minutes. Guarantee companies, not a big deal. We can't create any of these. Private company limited by guarantee having a share capital. There has been no new private company limited by guarantee having a share capital been created within the last 31 years. 1980 was the end of it. If you did have a private company limited by guarantee with a share capital, you still may have it. But there have been no new ones in the last 31 years. If it doesn't have a share capital, again, they're unusual companies. They're things like local drama societies, local theatre, local opera societies, amateur opera societies who decide to create themselves into a company. Again, in pursuit of good works, whether it be health, commerce, education, the arts, music. If there's something like that would fall nicely into a private limited company, limited by guarantee, not having a share capital. But that's it. I'm not going to talk any more about them. Well, I'll explain what is the expression limited by shares, limited by guarantee. I'll get there, because we are going to have to concentrate heavily on private, limited by shares companies. But I want to get back onto page 59. Corporation, I mentioned 5 minutes ago. Corporation is a fancy word for a company. And when you create a company, you can either say we form the company, which is not really technically perfect. So instead you would say we incorporate a company. We incorporate. It's another word for made or created or formed. But in the context of company law, when you create a company, it's called the process of incorporation or formation. And there are different types of corporation. Your note on 59 tells you that we have these two different types of corporation. A public office which is filled by a human being is a corporation soul. Your Minister for Culture, it would be a corporation soul. And your Minister for Culture will be appointed by various successive governments and will change according to various successive governments. Your Minister for Culture, the identity of the person will change, but the position stays. I read once that the monarch, the Queen, the monarchy in the United Kingdom, I did read it once, and it said that the monarchy is not a corporation soul, and I don't personally understand why not. But I have to believe it. If someone writes it down, I believe it. But I don't know why the monarchy is not a corporation soul. But the Mayor of London is a corporation soul. And even though the socialists got rid of the position, it actually still did exist. You can't get rid of it completely. It's still there in the darkness, and then it will come back up again. And so the Mayor of London is a corporation soul. Corporation aggregate, this is where a number of like-minded individuals get together and agree to form themselves into an artificial person. So all of us in the room may decide that we're going to call ourselves Via Finance Limited, and we can create this. It doesn't exist at the moment, but we can create it by incorporating it, and that would be a corporation aggregate. It's the collection of a number of like-minded people. Now, any of us can leave at any time. We can, all of us, or any of us, sell our shares, and somebody hopefully will buy our shares, but the corporation aggregate will continue, the same as the corporation soul will continue. But in 50 years' time, I'm sorry, let me extend that. In 90 years' time, when all of you have gone, when all of you are contributing to the oil reserves of future generations, the corporation aggregate will still continue to exist. So you can't, or you can technically, a corporation aggregate does not die of natural causes like we do. So corporation aggregates. And the death of an individual member has no effect on the existence of a corporation. This is different from a partnership. If we're in partnership, Eddie, Christina and I are in partnership, and I die, these two, the remaining partners, the firm, the partnership, which was called the Eddie, Mike, Christina partnership, is finished. So when a partner dies, the firm dies. But they can agree and start up a new firm together immediately after my death. So the effect is that the partnership will in fact continue, but technically it's the end of one partnership and the start of a new partnership. The way in which we can create companies, there are three possibilities. Realistically, there's only one. In theory, there are three. Royal Charter. The Queen can grant a royal charter to an embryonic idea and say, I will create a company, or I will give authority for this company to be created. And the monarch has got the power to do it. And it did happen back in old times when the East India Tea Company and the Hudson Bay Fur Trading Company were created back in Victorian times. And Queen Victoria said, look, there's a company. Oh, there's another company. And these companies then went out to the far corners of the earth and killed the locals, basically, planted the British flag and said, this is now our colony, and we're going to get all your tea from East India, and we're going to get all your fur from Canada. And it was the viciousness of the British which allowed this and encouraged this to happen. But that's how some companies were created, by the Queen saying, let's have a company. Some UK universities, many UK universities, are created by Royal Charter. But it's rare nowadays. I don't know, it may be, but I don't know of Queen Elizabeth being involved in creating a company by Royal Charter. I never heard of it. And that's it, I'm not going to mention these again. That's it. Royal Charter companies, that's the last you'll hear. Good? Yeah. Statute, equally if not more rare, well, I'm not sure. Statute where government, by passing law, creates a company. Now, I think this is how the modern companies like British Gas, Telecom, I think this is how they were created. I may be wrong. I think this is how they were created. They were owned by the government. They were state-owned enterprises. The government said, let's sell these state-owned enterprises. Let's sell them to the public. So they arrived at a theoretical price per share, and invited the public to buy shares in these new companies. And I imagine these new companies were created by statute. But it's not a big deal, and it's not a frequent occurrence. It's only a rare thing. The government passes a law, and you've got a new company. And therefore, of our 1 million companies, on the screen there, of our 1 million companies, I would be staggered if there were more than 100 in total, created by Royal Charter and statute combined. I would be amazed if there were more than 100. So by far the most common, like 99.9% most common, is by registration. And so Tesco, the supermarket giant, Tesco PLC, or small company, limited. There is there a big difference between these two. And that's the suffix, the letters at the end of the name. The letters PLC tell you, it's a past exam question, the letters PLC tell you that this is a public limited company. PLC stands for Public Limited Company. And therefore you can see from the name alone that it is a public company. It's interesting that the word private also begins with a P, so unless you know, PLC could be public or private limited company, but in fact it's public. An LTD is the abbreviation of the word limited, and it's telling you automatically that this is a private company. Just a few words on page 60. A few words particularly about the public companies. A public quoted company, the expression quoted means that its shares are quoted on a recognized stock exchange, whether it be the Financial Times Stock Exchange or the Alternative Investment Market, the AIM, and I think there's a small company exchange where shares can be bought and sold through intermediaries. So if I wanted to buy some shares in BP, then I could phone up an intermediary and direct or instruct him to buy some shares on my behalf. He would buy them in my name, tell me how much I had to pay, I would have to pay him, but then the shares are mine. And I can do that through the stock exchange or through the intermediary buying and selling shares on the stock exchange. Only public companies can be quoted. Private companies cannot be quoted. If you see a quoted company, it must be public. And it must be limited by shares. We can't have public companies limited by guarantee. It's not a possible combination. A public company must be limited by shares. There's a definition of public companies coming up, page 61, and I'll say again that a public company must be limited by shares. Public unquoted, again, we're coming down this left-hand side of the screen, but it's a public company which satisfies the definition, but it's not quoted on a stock exchange. So I can't freely buy and sell the shares through this central intermediary. I can't ring up my stockbroker and say, can you buy me 4,000 shares in ABC PLC, because they're not a quoted company. But they are a public company. Private unlimited, I'll talk about private unlimited now. This coming down here, private unlimited companies 5,000. Probably the main advantage of having limited liability is that in the event of a liquidation, a liquidator's not going to come and ask you for more money to contribute to the insolvency of the company. Your liability is limited, and you can't go beyond that limitation. Technically you can, but only in exceptional circumstances. So your liability is limited. And now it may be limited by the number of shares you hold, it may be limited by the guarantee that you have given, but there is a limit to the amount of money a liquidator can claim from you. If you're a member of an unlimited private company, your liability is unlimited. That is, as a shareholder in an unlimited company in liquidation with a big insolvency, you are liable without limit to contribute to that insolvency. Well, can you see that this limitation is a major advantage over any alternative? Why on earth? Why would you want to create an unlimited private company when you could instead create a limited private company? And the only circumstance of which I've ever dreamed or thought about or read, the only circumstance comes down to property law in the UK. And in the context of property, we as a partnership own a piece of land. But according to UK property law, you cannot have more than 4 named individuals owning a piece of land. Can't be owned by the firm, it's owned by 4 people representing the firm. Now I want my name on that title document. Do you want your name on there? If you don't, it's fine. Vita, you want your name? Jana, you have your name on the document? So, on the ownership documents that says that Vita and I own this land, unless you want your name on there. Yes, Sandra, do you want yours? Well, the rest of you can't have yours on there, so it's just the 4 of us own this land. 10 years, 15, 30 years down the line, big argument amongst the partners. And 4 of us split off and leave you lot. And we take with us these title documents. Where are you? Nowhere. So what we can do instead is we can create an unlimited company. And get the unlimited company to buy the land. And then we, all of us, will have an interest in the unlimited company. And it's the only reason I can think of why you would want to create an unlimited company. And even then, why not create a limited company? Why create an unlimited? And the answer is, I suppose it's as close as you can get in company law to the liability of partners in partnership law. Because the liability of a partner in partnership law is limitless. There is no limit to a partner's liability. I still don't understand why people create unlimited companies. But apparently they do. I have nothing else to add to the remaining bullets on page 60.